I think there's quite a number of facets to that question. I think first and foremost, considering that it is the oil and gas season with the NIEC taking place right now, what I can say is the discoveries that had come through are world class. I mean, it's being compared to the likes of Guyana and Suriname. And what I've also understood is that the discoveries that were made are actually one of the largest in the history of sub-Saharan Africa. So with that, obviously, comes a lot of potential and opportunities. But at the same time, one can actually state that Namibia is not new to investments or to these type of discoveries. If one looks at the mining industry, the country has been mining for many, many years, whether it has been gold, uranium, zinc, or even diamonds. So we've been able to put through laws that is quite sustainable from an investment perspective for investors out there. So I think what Namibia has done quite well is be able to put in regulatory terms and conditions that are quite predictable and also considered safe. And hence why I believe that there are proper governance structures in the country for investors to feel safe and come through here with the right type of confidence level and invest in the country. The good thing about Standard Bank is that we are across, I think, 21 markets or just over 21 markets here in Africa, and oil and gas is not new to us. We've been involved in oil and gas projects in other markets such as Angola, Mozambique, Nigeria, etc. So we definitely look forward to what is about to happen here in Namibia. What it actually means is that, oil and gas may not necessarily be, I think, the end. What it could be is probably a platform to help grow other sectors. It could mean help around uplifting our educational sectors, uplifting hospitality, uplifting health sectors. So this could definitely be a foundation to help other sectors, I think, reach greater heights as a result of, the impact that oil and gas can have on the economy and the people in Namibia as well. No, 100%. I think as a country, I think it's safe to say that we are blessed, that we are strategically placed in this region for us to become, I think, the logistical hub, especially for our landlocked neighboring countries. But as you can already see, investment has already been made in our ports, in our road infrastructure, and I think it speaks volumes around the capability of our government being able to unlock these type of opportunities, not just within the sector, but as I said, for trade as a whole within our region as well. Without maybe repeating too much of what I've said, so there need to be fiscal certainty from a regulatory perspective. I think there's a consideration around stability that may need to be in place around that. We need to think about monetizing the gas as well. So we need to think about bringing in regulation around gas. So we need to have a policy around it. We need to have a master plan around it, because I think that will also be key. As you know, Namibia is a country that imports around 60-70% of the energy that it actually consumes. And we're quite heavily reliant on countries, the neighboring countries that we're importing from, that are also going through various sort of energy challenges as well. So the other thing that we may need to think about is building the right type of institutions. All right. So we need to make sure that we match our capabilities and our capacities with the capital that will come. Right. That will be very, very key. We need to make sure that we've got the right people in the seats, so that people can be able to execute in a timely fashion. So we need to think about building and scaling up our institutions, not just from a commercial sense, but also from a technical perspective, as I said, commercial as well as a legal perspective as well, so that we don't frustrate the processes that will be coming in place. You know, so those are some of the key elements that I think are going to be very, very crucial in ensuring that we don't stifle growth and investment within the country. So if we think about local content, I think there's quite a lot that probably still needs to happen. I think upskilling of individuals and certain institutions. I mean, we're talking about credit extension right now, which is quite important as well. So, I mean, I think there's still a journey to go, and things will have to be done in a phased approach because, and like they say, Rome was not built in a day. So, from a financing perspective, I strongly believe that there are various forms and strategies that can be followed. I think yesterday when I was in a panel discussion, we spoke about the learnings coming through from Guyana and what a lot of the Guyanese banks were doing. So what they did is focus a lot more on the value chain as opposed to getting in at the high end or at the sort of front end level, getting in onto the front end level in financing FPSOs. There we're talking about 13 to 14 billion USD type of investments and financing. And those type of financing will come through very sort of equity-led type of financing structures. So where we can play a role is once again looking at the value chain. So we can look at onshore service institutions, logistical service institutions. We can look at infrastructure plays as well, where we can definitely make a difference there. So, you know, products or service offerings that we are talking about here could be working capital, guarantees or performance bonds, supply chain financing is another example. But another point that I would want to raise is if we have the likes of government, we can definitely come together and partner up with them and say, look, government, you probably have got the biggest balance sheet here in the country. How about looking at a program where you guys can become the sponsor or the backer of this program? And then us as the banks can come in and say, you know what? There are already risk mitigants that have been put in place by government through this program. And these can be off balance sheet type of offerings or products. And once again, as I had mentioned, it could be, items around guarantees, performance bonds, as I had mentioned, but off the back of the support and sponsorship of government. So various programs of this nature can be put into place. We can even think about putting up partnerships with DFIs or international banks, where we can do co-lending together and sharing the risk together as well. So there's various means in being able to unlock financing if we have to look specifically as well to our local partners and local entities to make sure that there is proper local upliftment as well.